Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Wednesday, July 17th, 2013. Well, a very large black-bodied candle today, and a candle that's made a higher high but a lower low. In bar chart terms, this is an outside day, and with the trend still remaining up, and the trend has not changed all the way from the beginning of the uptrend from the 9th of July from down around below the 1237 level. And the trend still remains up, but this is an outside day in bar chart terms and does raise some serious doubt about continuation of the trend to the upside. Also, in terms of candlesticks, this is a potential candlestick reversal pattern. It's a bearish engulfing pattern, and that's where we have the prior uptrend in place, and that's the uptrend. Here we have the white-bodied candle, we have a black-bodied candle where the body of the current candle engulfs the body of the previous candle, and it does suggest that there is a strong likelihood of a change of trend. Now, with all of the Japanese candlestick reversal patterns, we do require confirmation. Confirmation would be a candle with a lower high and a lower low, and that brings the 1266 level into play. And we've seen previously how that area has acted as support, then resistance in the recent past, and then support and support again once a day. So that will be crucial to this market if the market is going to trade lower. What we'd like to see is a solid bearish breakout down below there if the market is going to trade to lower levels. We do have very, very solid support down below there, extending down to the 1250 level, the 1237 level. We also have some of the Ichimoku indicators, the Tenkan-sen trading around that area as well, so very, very strong support down below. But also, by the same token, very, very solid resistance overhead, and the market interacted with that resistance at around number 1300 today and was strongly rejected, and this is the first time that we've seen a largish type of black body for some time. So the sellers are attempting to now build some momentum and may find some momentum to break through the 1266 barrier to the downside. We've also seen the sellers close with control of this market. We haven't seen that for quite some time, and back to this candle here in the 5th of July was the last time that we saw that. So a good likelihood of a change of trend to the downside. The sellers have also been strongly committed to taking this market lower after the price action was rejected from that 1300 level, so a lot of this is adding up to a lower price action. Now, in terms of pattern, this congestion area that the market's in at the moment may be forming some sort of a wedge type pattern, and here we have the prior trend moving into the pattern forming with the peaks and troughs converging, and there is a little bit of creativity with this, but it certainly is some sort of a congestion area, and to me it looks like some sort of a wedge. Some people may say it could be a triangle if we consider these two highs here, these two peaks to be equal, but really to me it looks like a wedge and forming fairly quickly. So this wedge is actually sloping up with the trend slightly, and wedges that tend to slope up with the trend tend to be reversal patterns and move back against the trend, so there is a possibility of that. But the thing with wedges is that they can break out in either direction. They can be continuation patterns or reversal patterns, so we need to be on the lookout for a close either above the barrier at the top or the barrier at the bottom. And what we're looking for is a close above or below those areas. So there still could be a breakout to the upside from this pattern. Now, in terms of the Fibonacci extension, and we're still, remember, in this first time frame uptrend that we have been in for some time, even though the market is congesting, the trend technically is still up, and the market has once again interacted with the 100% level, and now we're seeing strong rejection from there. This does suggest that there is a good possibility of a change of trend occurring to the downside. And also with the Fibonacci retracement, we've seen the market interacting roughly with the 161.8% level at 1304, just above that 1300 level, so that's coming into play and exerting its influence, and we are seeing a sell-off and suggests that there is potential for a change of trend. Now, in terms of Ichimoku, obviously a bearish market in the long-term time frame, with the market trading down below the cloud, and interestingly, as we move into the next week or so, the area of the cloud will actually be moving down closer to the price action, so the amount of overhead resistance will be much closer, and the market, if we stay trading up around this 1300 level, will be meeting equilibrium at a much a lower level. So that's quite important and may give the market then some more impetus to sell off. So let's be aware of that. The further that we trade into the next week or two, the more likely that the market may then trade down to lower levels. But at the moment, we are still a fair way away from the cloud, so not really exerting its influence. But there is a possibility of the market still being attracted back towards the equilibrium suggested by the cloud. But overall, trading below the cloud gives us a bearish market, and that does suggest that if there is a breakout from this congestion area, from this wedge type pattern, then it's more likely to be down to the downside, and that's in line with that wedge being an upward sloping wedge. So let's be prepared for that close down below. In terms of the Kijun-sen, the pink line here, the market is now trading down below there. We had a close up above there for the previous day's trading, now trading in a bearish manner down below there. Attempted to trade above, and it's held as resistance, and we've seen the sellers come into the market, so suggesting a negative market in terms of the medium-term time frame, trending down in the medium-term time frame. In terms of the Tenkan-sen, however, the market is still trading up above the green indicator here, the Tenkan-sen, so we have a bullish market in that short-term time frame, and we should now be looking to the Tenkan-sen to hold as support if the market does trade down through the 1266 level, and that area is coinciding with this previous zone of rejection that's extending down to around the 1250 level, so let's watch for that. So we're getting some mixed signals with the Ichimoku indicators. The Chikou span here is below the corresponding price action, so it's confirming the negativity that we're seeing in the higher time frames, and does suggest that the breakout may be to the downside. But we do need the market to break out down below the Tenkan-sen, the green line here, for the market to be negative in all three time frames. So let's be aware of that. So overall, we have that strong barrier overhead around the 1300 level, coincides with the top of that congestion area pattern, and the bottom of the congestion area pattern coincides roughly with the strong support at 1266. The market is congesting. Let's wait for a solid bullish or bearish breakout either above or below. At the moment, the odds may be favouring a breakout down below, so let's be prepared to enter the market if we do see the market break out in that direction.